What's up traders, welcome to Failure to Displace. In this video we are going to take a look at this morning's epic London session where there was two fantastic opportunities, one on the pound USD after a major red news folder release and the second on Euro USD from a 15-minute order block entry. Both textbook 2022 model entries. Be sure to stay to the end to listen to the analysis on the pound and how we can avoid getting sucked into trades too early before the real move occurs. So with that said, let's jump into the charts now and see how these setups developed. First we'll take a look at the Euro USD opportunity. As always, we're going to start off on the 15-minute time frame using our session liquidity tracker to show us potential levels of liquidity for reversals. So these green lines here highlight untapped levels of liquidity at session highs and lows. Links to the indicator are down in the description below, along with the other indicators that I use. So if you want to set your charts up to look similar to mine, then the details are all down below. Currently coming into the London session, we are inside the Asia range. Created relative equal highs at the top here, so that's quite a nice confluence. And then obviously we've got the untapped low. This big pump here that we see has left a lot of inefficiency in the market, so you could potentially be looking at a reversal to fill in this inefficiency. We built liquidity high and maybe we dig back in before coming up and sweeping the highs here. We can see we've got the new week opening gap, which has come and been retested yesterday on Tuesday, and then we are pulling away. So we came to the 50% of the new week opening gap. Hasn't been filled in full yet, so there is still potential for further downside following a higher time frame trend that we've got. So let's mark out some key levels on this chart. First thing that I'm seeing is these big bullish fair value gaps. This lower fair value gap is the one that I'm most interested in observing, because it falls in line with this order block. So these consecutive down closed candles here are forming a larger higher time frame order block. So I want to note those on my chart. If you can see multiple PD arrays stacking together, this adds extra confluence for a trade. So having fair value gaps in line with an order block is pretty significant. We've also got to take a look at our optimal trade entry for this full range after the pump yesterday. So we'll pull a fib from the low that was put in the New York AM session yesterday to the current high of the Asia session. We can see our optimal trade entry is at the bottom of this order block. The premium is above 50%, which is this green line here. So when we're in a premium, we're looking for sells. When we're in a discount, we're looking for buys. Obviously, we want to buy cheap and sell high. So if we're looking for longs, then we want to be looking in this area, which just happens to fall in line with that order block. So that's quite a nice confluence. One thing we need to be aware of is we do have red folder news at 2 AM on the pound. Pound news will affect euro as well, so we do need to be aware of that, which means any trades before 2 AM, I'm not really going to be interested in. I don't want to take trades 15 minutes either side of a news drop. So we're more than likely going to be looking for a 2:30 to 3 o'clock trade based on when the news is going to drop. So let's drop down into the lower time frames now and see how the session unfolds. So our session begins at 1 AM. This is the open of a new 4-hour candle, which can potentially be an injection of volume coming into the markets. As we scroll forward, London is opening now. So we need to keep an eye on these green lines. Obviously, keep an eye on the fair value gap that we've highlighted along with the order block as well. And potentially if we sweep these highs, that would be a really good place to look for a reversal, because that would take out yesterday's high and the current daily high as well. We're going to drop a pin on 2 AM just so we know when to expect the news. So we're not looking at doing anything until after 2. So we've taken Asia low. Price is dropping down. So we're not going to get sucked into looking for a reversal here because we know news is coming on the pound. So we need to be patient at this point. We're into our area of interest. So we're into the higher time frame fair value gap. If we're going to be looking for a reversal, ideally I want to be looking for it in a discount of this range now. I'm going to drop to the 1 minute time frame so we can now see how price is going to react after the news drop. Price is continuing down. So this is now 15 minutes after the news, so there's a potential to look for a trade at this point. So we've got a swing high here. So if we're looking for a 2022 model entry, this would be the break of structure up here. So we would need to see a break of structure with displacement, leaving a fair value gap for a 2022 entry. Ideally, we want to be coming into a discount though, looking for that entry. Price has not yet gone into a discount. Smart money wouldn't be buying above this level. Come down, we've got relative equal lows here. Now, so we're building liquidity at this point. We're building liquidity above the discount area. Do we have any session liquidity at this point? We don't, so our session low is down here. Okay. So we've built this liquidity, we've just swept that liquidity now with this, and we are displacing lower. So there's no displacement higher yet, we seem to be displacing lower. We've left a volume imbalance along with a fair value gap. We're just approaching the discount. This is 50% of that larger 15-minute fair value gap has just been tapped. So again, I'm not going to get sucked into a trade. Where are we at? 235. So we're into a 230 candle at the moment. Creating more relative equal lows here. So we've just pinned through this. We've had a break of structure. So this high would be the break of structure now. So to identify a swing high, we've got a lower high to the left, lower high to the right. This one in the middle is higher than both of them, obviously. So this would be classed as a break of structure. So we have got a break of structure. We've left fair value gaps. However, we've not tapped the order block, and we are very, very close to it. So I would prefer to come into the order block, if I'm honest with you. I'm not convinced by this move yet. It hasn't come back into that fair value gap. It's pulled away, broken more structure. Pulling away high now. So this is where we just need to sit and let price do its thing. This is where sometimes FOMO can kick in and you think, ah man, I've missed it, and start chasing the move. Don't worry about it. We just need to be patient. We've still got the 3 AM candle to open. So we may miss the move at 2:30. This could be the move, but maybe we'll get a smaller, lower time frame liquidity sweep at 3 AM so we can get into a continuation trade. So it's important not to panic. Large engulfment here. So price has come up. It's taken some of this liquidity that we've built up. So what we've got kind of trend line liquidity coming down here. Price has not really had any significant pullback, which means it can easily reverse through this. We've not built a lot of volume there. We've come up, we've swept this big engulfment candle. Maybe we get a pullback now to optimal trade entry, which is here. We do have a breaker block there as well. What I'm suspicious of, I'm going to class that as a breaker. I'm suspicious of these relative equal lows though. For reversal trades, I like to see an aggressive move down followed by an aggressive buyback. Wouldn't class this as an aggressive move down. We've just kind of wicked through, very shallow wick into a discount, and then have pulled away. It's not particularly aggressive price action, I don't think. And then when you look at the size of this bearish candle compared to the bullish ones coming up, I think there's justification to say that the sell program's not over with yet. Left a big bearish fair value gap there. Balanced price range, bearish balanced price range. So the balanced price range is a bullish fair value gap followed by a bearish fair value gap. Where the two overlap is a BPR. You can see this candle's also creating a BPR down here as well, along with this volume imbalance. So these will be sensitive areas. Time 2:53. 2:59. So this is 3 a.m. So we've completely ignored the breaker block. We're coming into a new hour now and we are aggressively moving down. So this breaker block has not held us at all. We have a fair value gap here. Again, it's cleared straight through that fair value gap. We've cleared out this. This is nice to see that we didn't jump into the trade here. Stacey Burke often says it's the second mouse that gets the cheese. First mouse would be this move here. So you're jumping in quickly thinking that you're getting it, but they've come back, open of the new hour, take out any traders who've gone long too early. So this is kind of a false move, sucking traders in. And now we can see this aggressive move down to smash anybody out of their trades quickly. So we want to see an aggressive buyback. So we've tapped the order block now. So this orange shaded area is that higher time frame order block that we highlighted. So we've tapped the order block, we've swept this liquidity. Again, an aggressive movement. There you go. So this is an aggressive buyback. So we are now 3:09. So essentially we're halfway through the 15-minute candle. So 3 o'clock starts. We've had 6-7 minutes pumping down, take out the liquidity, and then potentially now we've put in a bottom wick on a 15. We'll get a strong buyback. So we've got the bearish fair value gaps. We need to see how price reacts on these bearish fair value gaps now. Do we fill them in? Or do we respect them? We'll close through that fair value gap. This is now an inverted fair value gap. I did have a comment asking what's the difference between a BPR. So this is an example of a difference between a BPR and an inversion fair value gap. BPR has two fair value gaps back to back. An inversion fair value gap is just one fair value gap on one side. It doesn't have to leave a fair value gap on the other side. This actually does, so there's a small BPR there. So we're back into this fair value gap, inversion fair value gap, bullish fair value gap. So they're stacking up here. So we've still got the bullish fair value gap at this point. I'm just going to change the color of that so we can actually see what it is. Got a bullish fair value gap, an inversion fair value gap. We also have this breaker block. So this is the last bullish candle. Created a high, created a low. This should have acted as an order block to repel price lower. However, we've traded through that, so I would class that as a breaker. So we've got a lot of things stacking up here. And let's take a look at where we are in price, in time, sorry. So 3:14. So we've come back, we've tapped the fair value gap. We've had a break of structure at this point as well, with a wick, so it's not a body close, but we do have a break of structure at this point. So we've had a break of structure, we've left an inversion fair value gap, we've got a bullish fair value gap, we are within a breaker as well. We have tapped a higher time frame order block, we've had a strong impulsive move down to take liquidity, so we can see that this is a decisive move down, but then a strong buyback. This wick here is showing a lot of momentum, bullish momentum to take price higher. We've respected this fair value gap once. Let's see how the new 15 opens. So 3:14, 3:15. Respected the fair value gap, pulled away into the fair value gap again. So I would be tempted to be looking for an entry here, expecting this fair value gap to hold. So you could either market buy at this point or hope for another retest of this level. And your target, sensible target, will be taking the sell side that's at the top of here. There's TP1. Buy side, sorry. At the top of here. So fill in this inefficiency and then ultimately look for the session high to get taken at some point. However, we do have red folder news later on today, so you're going to have to be nimble with your take profits, I would suggest, at this morning, because we do have CPI at 8:30 this morning. So I would just be happy to take 2.3. So yeah, we've come back, we've tested that inversion fair value gap again one more time. That would trigger you in. So we're still respecting, we can see there's loads of opportunities to enter at this point. We're just respecting this PD array. Big engulfment candle. So if you weren't in, this would be a good trigger to say, yeah, now's the time to go. We have a displacement candle here. The price moves in. So that would be a potential better confirmation entry. We've had a displacement candle engulfing all of this. We left a bullish fair value gap at that point. Take an entry from there, expecting this to hold. Maybe a more sensible entry in all fairness. Targeting the high. Perhaps that's a bit risky. Expecting that to hold there. So we'll come in, we're tapping that fair value gap again, and then price explodes away really aggressively. What time is that? 25. So we're not at a new 15, but the volume has come in. You can see how price stalls at the BPR, so we're having respect of this. Again, we would expect it to be a very sensitive area. But I'm still expecting a run on this buy side liquidity. Strong pullback. There we do. Eventually we tap that. So you got a potential 2.8 or 2.3 depending on which entry you took. I would probably suggest, in all fairness, this second entry was the better entry. Seeing that displacement candle, that big bullish displacement candle, then a pullback into the range would make sense. Either way, great opportunity. The telltale sign was this rejection candle into the order block. That's really what gave me the confidence to start looking for this trade, and then seeing how this fair value gap was holding. You could get in at any point at this time. We'd had a break of structure. This fair value gap was holding really strongly, and then we had clear buy side above us for a nice target. So that is the trade on EURUSD. And here we are on the pound. So this is a much simpler trade. Obviously we know that we've got the red folder news coming at 2 AM on the pound, so it's going to have much more of a reaction than it did on the euro, you would expect. Our levels of liquidity again are shown with our liquidity tracker, so we're in a similar range as what we were on EURUSD inside the Tokyo range. New week opening gap was tested yesterday, hasn't been filled completely through. Still in bearish overall market structure on the pound, so it's just been dropping continually for the past few weeks. Lots of liquidity below us, so in this instance you're basically just waiting to see what the news does and then looking for a reaction after the news. So we're going to jump onto a lower time frame, keeping an eye on all of the levels of liquidity that we've got. We'll skip forward to 2 AM. There's your news candle. So that's dropped right down. We're going to drop to the 1 minute now. So we're not looking to take a trade while at least 2:15. I like to give it 15 minutes just to settle itself down before I would start looking for any kind of entry. We've obviously come down very aggressively. We've gone straight through the new week opening gap. We've taken session liquidity from yesterday. We're very close to this untapped session liquidity here. So respecting the new week opening gap, using the new week opening gap as resistance now. So we've come through it and then rejecting from the other side. Taken another session liquidity. We're very close to this one. So at this point I would be on guard for a 2022 model reversal now. The break of structure for a 2022 model is here. Because we are so close to this session liquidity, I wouldn't really want to be taking a long until we take that liquidity out. Let's see what happens. So here's a telltale sign. We are building liquidity above a session level of liquidity. So this is just engineering more liquidity above, enticing buyers to get into the market too soon when they've not taken the liquidity. So if you ever see this, I always find this really, really suspect. Our break of structure is this swing high for a 2022 model, but I'm definitely not going to be interested in looking at any trade until we sweep this. We've got relative equal lows here now. We need to be sweeping this session liquidity before we look for any kind of reversal. Just engineering more liquidity above it. So this is where you'll get sucked into potentially going long if you're not using a little bit of common sense with the 2022 model. This is an ideal 2022 model setup, but you've got relative equal lows above a session level of liquidity as well. This is a massive magnet for price. Obviously, price has been super bearish already. You do expect, when you've traded through red news quite often, that these huge moves do get retraced. So this manipulation in the market will often get retraced. However, this is a trap, in my opinion. They've built liquidity above session liquidity, so I wouldn't be interested in trading that until this lot gets taken out. I'd want to see an aggressive move through this and then a buyback for a 2022 model reversal. So we're going to keep our eyes on the time. We're at 2:45. We're kind of in the middle of nowhere at the minute at 2:45, so there's no entry. So potentially 3 AM is going to be our target. New 15-minute candle opening, or a new hourly candle opening at 3 AM. Big displacement candle down into this area. So this is where if you were trading 2022, you'd have probably got triggered in at this point. And you'd be regretting it because it's now coming for that liquidity. So we've just built another equal low. We want to see it smash through this. There we go. So we have an aggressive move. It's taken that session liquidity now. Our break of structure, I would be interested in a long at this point because we've aggressively moved through. We've taken all of this liquidity. We've taken the previous session liquidity with an aggressive move down. I want to see an aggressive buyback. Something like that. So that was our break of structure here now. So we're putting a new swing high. Higher candle, lower high to the left, lower high to the right. So this is a new swing high. We created a new low. So this high is what led to the new low. So that's my break of structure. We've now had a displacement candle, a huge candle that engulfs this whole section of price action at 3:06 as well. So we're into the new hourly candle. So I would say that's an aggressive buyback. See if we leave a fair value gap. We do leave a fair value gap. So what we've got here, obviously we've got a large fair value gap left here with a solid break of structure at this point, leaving a breaker block. So this is the last up closed candle that created the new low breaker. So this up closed candle led to a break lower, and then price has bought back. It hasn't respected this at all, so this would have expected to hold price down. It didn't. Price has closed through it. So now potentially this will act as support if we come back and retest it. So we've got a fair value gap within a breaker. This is the wonderful unicorn entry. Your entry would be tap of the breaker block, stop loss just below the low by a point or two. And then where would you be targeting? Well, the potential for this is actually quite massive because we do expect this high to get taken out. As a TP1, I would be going here. Nice 4R just underneath the new week opening gap. We can see the new week opening gap acted as resistance once. So potentially we could just come up, tap that, and then again come away. So I want to take TP1 well before that and then leave a runner just to see if we can retrace all the way back up. So the entry is going to be based on tapping the top of this breaker block, digging into around 50% of the fair value gap that we've just left. So we come in, we tap the breaker block perfectly, and look at that for a perfect reaction. Really, really strong. So that's tapped it in by literally a tick. Your spread may not tap you in at that point, so you will be really upset. Price pulling away. Really aggressive move. Literally zero drawdown, instant 4R. That's just perfection, is that. So these are the instances where you may want to consider giving yourself a little bit of wiggle room, because although that has tapped that, this is brilliant in hindsight and looking at it on TradingView. In reality, spread would probably have not taken you in there. So you need to account for your spread when you're in your entry. So maybe you need to give yourself 2-3 points to get in this trade above the breaker block. These things are so precise when they do get triggered. Get yourself in, 4R, and then as I say, you take the majority of the trade off because we have got red folder news later on in the day, but leave a runner coming up. We've got an order block here. These last unclosed candles before the news. Close out just before you get to there, which would be an epic 9.7R. See how this reacts. So price is retracing a lot of this inefficiency as we expect most of the time after red folder news. Nearly up to lifetime now, so we've not quite come to the top of that order block yet. And we've done it. Oh wow, perfect. So it literally just happened now. So that bags you your 9.7R if you were looking to target this order block from a perfect entry off a breaker block. That is just textbook. And the key to this one is expecting red folder news to get retraced, but being aware when we're building liquidity above previous session liquidity. That's the trap. So you need to wait. And the ideal situation is when you see an aggressive move through that liquidity and then an aggressive buyback. That's the trigger. Aggressive move, failure to displace below this liquidity level, and then a pullback into the range, an aggressive pullback into the range, and then look for your entry. Textbook. I didn't catch this, so don't be thinking I'm the greatest trader ever to catch these. This is all hindsight, but that is absolute textbook. So hopefully next time we know what to look for and can maybe profit from this in lifetime. Okay, I hope that was useful, guys. Thank you for watching. If you did find it useful, please leave a thumbs up. If you have any questions, drop them down in the comments section below. And if you're enjoying this kind of content and want to see more of it, then please consider subscribing. I'm dropping videos like this more or less every day. It'd be great to have you on board. Thanks for watching. I'll see you again in the next video.